Hello and welcome to another episode of EastTV. I'm Sian Dowling and I'm here with our Head of Markets Analysis, Martin Smith, to talk about the middle market. Marty, what does our latest research tell us about the corporate segment?
Yeah, I mean, if we take a look at our most recent research, we see some really interesting feedback from CFOs and treasurers across the whole mid-market there. Take, for example, our trade finance research. We find that businesses are really interested in streamlining their operations. There is a view to improve productivity, and there is the understanding that margins achieved by businesses that are exporting are up to 25% better than just domestically oriented businesses. So there is a willingness to look offshore. In terms of the actual tools by which banks can provide them with, there is a relatively low level of satisfaction. A lot of businesses are having to use a secondary trade finance provider for a number of reasons, and we've actually seen wallet share drop to 60%. So they're only allocating 60% of letters of credit and other financing tools there to their primary provider, which is important. In equipment finance, for example, it's definitely one of the most competitive areas, and that's an overarching theme in the corporate segment. There's no standout market leader. We see the Big Four facing a lot of higher competition from international offerings and from non-Big Four Australian banks as well.
Do we see it in the other product markets?
Yeah, I mean, take, for example, transaction banking. In our corporate transaction banking program, we ask businesses if they're satisfied with their offering, and really what we see is a changing of the guard there. So previously NAB was a standout market leader, but they're definitely facing increased competition, particularly from Commonwealth Bank of Australia. We see the cumulative market share for the Big Four in transaction banking up at around 80%, but that's beginning to wane. Again, international offerings such as HSBC starting to get a firmer foothold there in transaction banking.
So how can some of these big things be addressed?
Yeah, well, in trade financing, there's a real need for improved open account financing, for example. Previously definitely a preserve of the institutional segment, there is definitely demand for a move away from traditional letters of credit. In equipment finance markets, there's a view that there needs to be a simpler credit approval process and faster credit approval turnaround there, which is interesting. We often see that reflected with our small business research, but that is still a major factor in the corporate segment. And in transaction banking, it is definitely a focus on full service international transaction banking and an improved payment processing system there as well. So as businesses are expanding abroad and looking to grow further, there is a requirement for the business banks not just to provide, I guess, what their institutional clients are getting, but for corporates, but really focus on what is a competitive and important segment in the market.
Great. Thank you so much for your time, Marty. We'll talk to you next week.